from alphatrends.net. Today's Saturday the 4th, and let's take a look at this market. We were down for the most part for the week. Oil was higher, as was energy names, and Bitcoin gained a little bit, although it is looking pretty ugly. Let's take a look at the charts here. Here's the daily chart of the S&P 500. On Thursday, I put out a video and said that, you're basically foolish if you want to short the rip, and that's just a core belief of mine. Just like I always say, don't buy the dip, buy strength after the dip. You don't want to short the rip. Now, some people said, hey, you were wrong, blah, 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 about, because, you would have had to sell short in the last 10 minutes of the day. But of course, the internet trolls always all did that. The point is, we're still kind of in this intermediate term uptrend. The light has turned yellow on this rally. You can see that the volume weighted average price from the Federal Reserve a week and a half ago, that's where this rally emerged from. That volume weighted average price held all day on Friday. There's no other reason for the market to hold in that area. It's not a coincidence that that volume weighted average price is where we found the buyers. The negative thing is we're below the 5-day moving average, and on Monday we'll be getting rid of this data from 5 days ago. That means that that 5-day moving average, as we get rid of this data throughout the day on Monday, if it's replaced with data, let's say, that's just stuck under the 5-day moving average, well, then what will happen? The 5-day moving average will be declining at that point, and if we get trapped below it and break below this volume weighted average price, I think it's highly likely that we come down and test the volume weighted average price from the year low, basically, at this point. So let's go back to the daily time frame. We've been fighting with the horizontal level, that is the prior support in here, which you can't even really call it support, but the prior low where the market bounced from. It did kind of hold as support in here for a little bit, and then had the opportunity, fell short of becoming resistance, and we're trying to hold in this general area. That's somewhat positive, but again, the bigger picture, we're still below the volume weighted average price from this March high. We're below that green 50-day moving average. The 20-day moving average is still declining, so we've got a lot of mixed messages. To me, it says don't be aggressive in either direction. Continue to take it on a stock by stock basis, and listen to the message of the market for your time frame. My time frame, the one that I'm most interested in all the time, is a swing trader's time frame. And again, I'm not going to short strength sell short strength like this and just hope that I get a gap lower. I want to go with the odds. I would much rather short over here if it starts to break down, from something like this, and be shorting, 8 points lower. I would much rather short here with knowing that I can control my risk with a stop above the most recent relevant lower high, which would be maybe somewhere around here, and look for a move down to that level. That's my preference. I'm not here to tell anyone what to do, but I know that the reason I've been involved in these markets full time for 31 years now, 1991, is that I'm conservative when it comes to shorter term trading. I truly believe that risk management is job number one. It's not just something I say, it's how I'm still in this business, where I've seen so many other people get knocked out over the years trying to be heroes. The Nasdaq, as we know, came down to the volume weighted average price from the low of 2018, and that's where the buyers emerged for this rally in the primary downtrend. So again, we're in the primary downtrend. We've got declining 50 and 200-day moving averages. We've got all of the key moving averages declining, including the blue 20-day moving average right there. Now this week we'll start to see that 20-day moving average will flatten out as we get rid of data from over here about 20 days ago. So that's one of the near-term kind of positives. We're still stuck. The biggest concern for the Nasdaq is we had this prior band of support. Support broken tends to act as resistance. It was support, 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 then a battle fought in here. That became distribution. The market dropped precipitously from there, made a lower low, and now if we rally up to this level, we've got not only that horizontal prior support that has the potential to become resistance, but we've got the volume weighted average price off of the March high that also says maybe this is going to be resistance. And don't forget, this green 50-day moving moving average is descending at about this rate. So that means if we were to do something like this week, well, then all three of those levels would come together, and that just makes it more likely that it would, in fact, become resistance. We'll only know after the fact if it goes up there and then drops lower. If instead it turns sideways and then we see a new bull market emerge, well, then that was the low. But I'm not here to try to pick the bottom of the market. I'm here to try to make money on the intermediate term trends. We see in the Nasdaq as well that the volume weighted average price from the Federal Reserve has been dead on 100% where the buyers are emerging. There are buy programs there. Don't read into it any other way. That is just the fact. So same story here. 5 days ago was over here. That means on Monday we get rid of this data. What we could see happen is maybe something like this. We get stuck below that 5-day moving average. That 5-day moving average begins to turn lower. And then, the more times any level of support is tested, the more likely it is to break. So if we, stay trapped under the 5-day moving average, we test this volume weighted average price from the Fed some more, it becomes more likely that it breaks, and then I would think it was highly likely it will come down to test this level, which is also, basically the round number of 300. That would be the first stop on the way down that would be reasonably expected to be tested. It doesn't mean that would be the low, and I certainly wouldn't be a buyer there, and I would look to maybe cover partial short if I was to get short over here. But right now I don't have a position in the Nasdaq. I'm looking at it as this is the most likely scenario. Let's see what the market gives us, and we have to be able to adjust on the fly to what the market tells us. The Russell 2000 has been the outperformer since the Federal Reserve minutes over here. And we know that simply because we've still got a rising 5-day moving average, and this market is above that 5-day moving average. When we look at the daily time frame, though, there's really nothing here to be bullish about. In fact, if you look at this right here and then go back to the Nasdaq looks like the Russell 2000 did about a week and a half ago. Now, on this market in the Russell, we're up to this prior support and that hard fought battle in there. It is holding as resistance. We've got the resistance also reinforced by the volume weighted average price off of that March high. That's that red line. And we've got that 50-day moving average, which is declining, bearing down on it as well. So this week in the Russell 2000, I mean, if we can get above here and then hold above this level, that might end up being that this was a big trap. And it occurred at, not really an important level here other than, of course, the Fibonacci retracement, which is, let me do that. Here's the, from this low to this high, it came down to the 50% retracement right in there. That's what this line is. And of course, the prior resistance over here was touched almost perfectly, and that's where the buyers emerged. So, we've got to look at all of these pieces of the puzzle together. It's not about one time frame. It's not about one volume weighted average price. How do the pieces of the puzzle fit together? So for the Russell 2000 on this 15-minute time frame, it's saying, we've had a nice rally. I wouldn't be surprised to see further correction through time. Where has it come from? It just rallied from 170, let's call it, to 190. Where does it have the potential to go before it's likely to encounter a source of supply that's strong enough to become resistance? We're right there. So if I was a buyer here, would it make sense from a risk reward standpoint? Absolutely not, because we've just rallied 20 points into a level of potential resistance. So I would just leave this market completely alone. And, when I talk about these markets, apply the same analysis to every single stock that you look at. These are concepts that I'm talking about. They're not necessarily, hey, you have to look at this market this way, but look at a stock like Microsoft. Where did Microsoft bounce from? Almost to the penny down to the volume weighted average price from the COVID low. What about Google? Where did that find its buyers? Well, let's take a look at the volume weighted average price from that low. I mean, these things are, how about even a stock like UPS? Same story. Let's put a volume weighted average price on that COVID low. Now it's up to the volume weighted average price from this peak. So, look at UPS, for example. It just rallied from 164 up to 185. Would I buy here? Absolutely not. It's expended too much energy. It's into a level of potential resistance with this volume weighted average price and the declining 50-day moving average. A stock like this is more likely to maybe do something like this over the next week, week and a half. And if it's going to find a tradable, low, then the 50-day moving average comes down and flattens out, and then perhaps it could rally up towards the 200-day moving average. Let's get back on focus and talk about the semiconductors. These guys have been a little bit stronger. They're fighting with this 50-day moving average, which is declining. They're fighting with the volume weighted average price from this peak and holding above it. Is this market bullish? I don't think so. If you look at the 30-minute time frame or the 15-minute time frame, it looks like it's starting to turn sideways. If you look at some of the components, Nvidia looks terrible to me. If you're going to trade a semiconductor, look at a stock like ADI. ADI is back above the volume weighted average price from this peak. It's holding above that. If you look at Texas Instruments, TXN, nothing really good to see there. What's that other one? Oh shoot, there was another one that had my eye on, NCPI or something like that. I know that's not the symbol. Anyways, the point is take each stock based on its own merits. How about AMD? Right up to the year-to-date volume weighted average price after a big rally. Buying up here is extremely risky in this stock. I think it's more likely that it comes down like this, maybe test that 50-day moving average. The 50-day moving average flattens out, the 20-day crosses up through it. Look for it to pull back down towards 100. Anyways, back to the markets. The biotechs continue to battle with this prior band of support, which is holding as resistance for now. So again, is this part of this might be part of if they didn't scare you out, they're going to start to wear you out in here. There's no reason there's no hurry to get involved. Energy, look at oil, USL continues to be at a new all-time high. Financial stocks right up to where they're supposed to find supply. Let's see if this does in fact hold. We've got the volume weighted average price off this peak that has been holding it back, intraday to the penny. Now let's see on the 15-minute time frame, where are we? We're stuck below the 5-day moving average. The 5-day moving average is flattening out. The 5-day moving average will begin to decline first thing Monday morning. If we open at this level, that will drag the 5-day moving average lower because we're getting rid of this data. You have to be anticipatory about not just where the 5-day moving average is and what the direction is, but how is it going to respond in the next day, day and a half. If it does something like this, wouldn't surprise me, and I would think it's highly likely that it comes down towards this level to start to see, is it going to find buyers at the 20-day moving average or something like that. Energy names up at new all-time highs. The name of the game in there is to manage risk, raise your stops, make sure you don't give your gains back, because like every single stock out there, these stocks will undergo a correction at some point. There's zero evidence that now's the time there, but just be prepared, be smart, manage risk, like this stock, share it with your friend, like this video on YouTube, etc. Thanks for tuning in.